Welcome to Trading Lounge and the US indices, and this is the S&P 500 here on a daily chart on the Trading Levels charting program. And I just wanted to walk through a couple of the other indices just to sort of pick up where the push and the pull is, and how just sort of compare them a little bit, and also have a look at the US banks as well, just to get a general sort of feel of things. So the S&P 500 from this particular high here is quite significant in most markets. When we look at the Dow Jones and the Dow Jones Transports, the Russell and so on, this is quite a pivot sort of point here, and we've been looking at this whole structure here as a correction. In some of the stronger markets like the Nasdaq, we'll see the Nasdaq has moved like further up into this space here, while some other markets in this move up here have sort of lagged to the lower side here. So it's kind of interesting just to have a look at this. This is the S&P 100. This is the S&P 1000, which is basically the same. I'm going to go to the Nasdaq here. I'll go to the comp, but there's no difference from the fin to the comp really on these. But you can see here that this market has pushed quite a long way up into this space here. It hasn't really corrected. So the Nasdaq has been, the tech stocks have been lifting things higher, and let's just say that the banking sector has been moving sort of slightly negatively within all of this, and we'll look at that in a moment. But I can see from the beginning here to this top here that there is a beginning, the middle section, and then the ending section where we start to see sort of corrective moves here. So we will be starting to see, there may be another little high here. I haven't broken this down intraday, but very shortly there will be a corrective pattern occurring in the Nasdaq. So when we look at the Russell 2000, for example, you can see that it hasn't really moved along with the tech stocks. It's more in line with the S&P 500. When we look at the Dow Jones Transports here for a moment, we can see that from this significant point here that we're looking at, this is still in a corrective mode here. This is certainly looking sort of corrective here as well. So some are weaker than others. The Dow Jones Industrials, much like the S&P, hasn't really taken out the top here as such yet either. So yeah, different stocks are doing different markets are doing different things. When we come to have a look at the banks, I'm just going to go to JPM first, Morgan's. So with Morgan's here in the, this is where most of the US banks are, I'll just go back a little bit here. I haven't got it labelled, but this has really been the sort of the backbone of the markets, and even into the European markets, the DAX has got the same sort of thing as well, or slightly different at the moment. But in the main structure, we've got from the bottom here, we've got wave 1 and 2 here, and then we've got all the way up here for wave 3. So now we're looking at an A wave, a B wave, and then a C wave down here. And this particular pattern down here has got 5 waves in it, and this is the same as Goldman Sachs and other markets. So what I've been looking for here is I've been looking at this. Well, we get 5 waves, then we get an A, B, C correction. Now we can have the A, the B, and the C correction into this point here, but I was just sort of assuming that this was just, we were just having part of it at this stage. I felt like there's always been needed a retest of the 90, so to speak, here before having another 5 waves down here. And not that you trade these markets, but they basically will have an impact on the pattern. So we need to look around at what markets are working with what patterns, where that sort of weight of the markets is coming from. So this is kind of tied up, to a point within the S&P 500 here, and this will be the same for Goldman Sachs as well. So if I just look at Goldman's here for a moment, the same thing here as well. We've got this 1, 2, 3, 4, 5 to the downside, and I've been looking at an A wave and a B wave and a C wave back up here, and then another 5 waves down. So I know that the US corrections are not the ones that are correcting from around these dates here. They all might be doing something slightly different, but when you look at it, when you kind of think of an A wave and then A, B, and C for the B wave here, and then the C wave here, well, then being here somewhere, we're really only halfway through it, through the correction, So, I just think it's sort of important. The other thing that I wanted to mention here too is that if this is going to be an A wave and a B wave and a C wave up here, and we're going to see a little move up through here that might take a week, well then, what's that going to do to the S&P 500? So that's sort of been on my mind a little bit. So I was thinking going back to the indice watch list here, and just give me a second till I get into the S&P here. So I was thinking here that, well, if the banks are going to push up, if that is the case, then we may have to prepare ourselves for, one more little move to the to the upside here. I'm not quite sure, but we could do, and it may come from something like this that we haven't really noticed that much, which would be wave 1 and then an A and a B and a C here for wave 2, then all the way up for wave 3 here, then a wave 4 in here, then a wave 5 here. So I'm thinking that, if we do see a move up here, then we need to sort of understand it, and in understanding it, it would be a part of this little structure here, that first little move in here, and so we could grab that and put that over here. So we could see this market on the cash market here going to 1070 area here. That's a real possibility. So that's kind of what I wanted to sort of point out a little bit with the banks and this market here. Otherwise we'll call this top in, but just be prepared that if we do see a move up, it's not like don't think that we're totally wrong, it's going to go up forever. It would have to be based off this wave 1 here, A, B, C for wave 2, wave 3, wave 4 pulling back to the wave 4 of 1 less degree, which is already in place, and then wave 5 moving up in 5 waves, and then rolling over from that point into a larger correction coming into play at that point. Okay, so just wanted to sort of justify this moving up here if it's going to, and then we need to look on an intraday basis of what we can actually do with that. So with the S&P 500 here on the 4-hour chart that we've been sort of looking at, that it's up at its old highs here. We know that some of the indices are like this. Some of the other indices are much lower here in their corrections from this point here, and some of the indices like the Nasdaq, Comp and Fin are trading much higher up here. So it's good to see what's pulling it up and what's dragging it behind, and then try and figure out what's going to come of that. So what I wanted to do today was to point out that it's quite possible that this can be wave 1 here, with an A wave and a B wave and a C wave coming into play here. Well, rather an A and a B and a C wave coming into here. So it's possible to have one more sort of, we're looking at the cash market before, but it's possible to have one more move up to here and then move down. So all I'm saying here is that if we do see a strong move come into here for whatever reasons, then I'm suggesting that a nice clean break of that you can go with that, but we can't go with it for too long. That's all I'm saying. So if you see if you see this moving up here strongly, well then sort of where we are, and then you could also add being long on the 24 and moving up into the 20 and 30 area up here before seeing the move down. That would be in line with the banks. Okay, and that's kind of what we're expecting in Australia as well for our markets. Now, apart from that, then we need to look on the downside here as well, And looking on the downside here, we've got a couple of problems. Is that obviously this is the high here on the futures market, but on the cash market, we've got this is the high here. So as I've mentioned before, I'm not quite sure which one we should actually choose here to work this particular pattern here. So I'm a little bit sort of confused about it. So I don't know. I know that if the market moved down and, you know, got trapped under 80 here, then we would be pretty much on our way down into you know, what the banks are going to be doing in their wave C, or even in the triangle pattern. But this gap here is really what we'd be looking at. So a move into the 2340 area here is what we're looking at, but we haven't really seen that sort of that breakdown there. So working on the tick chart here, 100 ticks here, as I mentioned, I don't know if, obviously this is the high here on the futures market, this is the high here on the cash market. So if this is the high here on the cash market, well then it would make this move down here in 3 waves as a corrective wave. Yeah, I mean, the market can move up from here. So I think that, just to cut a long story short, is that this move up here appears to be in 5 waves. So I've just called it an A wave, but it could be wave 1 as well. So this has pulled back 50 or 60%, so that's good. This little move that's moved down from this high to this high here is actually in 3 waves, so it's corrective. And this little pattern here is a duplicate pattern of this one here, but smaller. So it can be 1, 2, 1, 2, and then move up quite strongly from here. So I'm also thinking that taking, whoops, let's just copy that rather. I think coming out of this little space here, I think I may have mentioned before that, you know, being locked under the 2390 would see it to the downside, and that's still the same. But here I can see that there's, if this is the high here on the cash, then it leaves us with 3 moves here as an ABC, which would take out this top then. But at the same time, we would still need to be you know, seeing a strong move above the 24 here to get that, because even if it was this, it could be an A and a B and a C to here, then an A and a B and a C to here, and then down from there. So basically an A and a B and a C. So there's too many variations that can play out here. But just looking at this small pattern here, is that this appears to be 5 waves. This is pulled back to the 50-60% mark. This appears to be impulsive. This corrective, impulsive, corrective, impulsive. So it does appear that it would like to move up. So I think we need to trade what we see, because I'm not clear on the correction itself. But breaching these old highs here would be putting you in the right direction to the upside. This is the 50-60% retracement level from this high here to this low here. So it will give a bit of problems there, but look for support on 23.95. Don't make any decisions quickly. You will see the market vibrate there, but it can certainly move up from that point there as well. So don't judge it too quickly, gather the evidence. And certainly if there's a break to the downside, then we're on that trend to the downside, and you'll need to trade that. So yeah, taking that low out there, and yeah, that's sort of about the best I can sort of offer at the moment. But it does seem that the banks need to push up into a space first before they sort of move down. So we're certainly in a space, that in a corrective space with too many possibilities. So we just really need to trade what we see and use support and resistance. Always work off the closest largest number and make sure that's tested. Like this is being tested here because it's got these higher lows coming in through here, and all it needs to do is breach one of these previous highs here, and that will give you the initial trend. Alrighty, cheers.